Nvidia just delivered results that topped expectations, reinforcing that the AI boom is still very much alive. As the most valuable company in the world, it gives investors a major read on where AI demand goes next. And with AI anxiety building, the company's February 25th earnings report is about more than just numbers. To help break all of it down, I'm here with Gene Munster from Deepwater Asset Management. Gene, what's your immediate takeaway?
First is that most people who are kind of tracking the broader headlines around AI, most investors should be pleasantly surprised. The bar was high, but they inched up the growth rate, accelerated quarter-on-quarter growth rate from the just reported quarter to April. So that's a sign that things are kind of moving in the right direction about the broader AI infrastructure. That need is still very much there. I think for those who are using these tools on a day-to-day basis, who are understanding how the utility of them has improved dramatically over the past few months, this really impressive guide that Nvidia had was almost to be expected. There was no surprises there. So this is the tale of the investor community kind of getting more in line, still not there, but more in line with the reality of how fast things are moving.
And is Wall Street actually happy? Investors were expecting strong numbers, but there's been real skepticism about whether the stock could respond favorably, especially with concerns around hyperscaler AI spending and a valuation that's arguably already pretty lofty.
So there's two different kind of orbits going around. One is just the Nvidia stock and then kind of the broader AI trade. And as far as the Nvidia stock is concerned, is that these numbers were, just to put some perspective around it, the street for the April quarter, because of course, when it comes to stocks, it's all about what's going to be in the future here. So their guidance for the April quarter, the street was looking for about 64% revenue growth. The whisper number was 70%. And they guided at the high end of their range, which they probably will exceed, is 79%. And so I think if you just look at where the whisper expectations were versus what they delivered, that was a beat. The stock traded up about 3% on that, but then kind of drifted down to flattish on the earnings call. And I think it really speaks to the intensity that this bar keeps getting ratcheted up down the future, and this concern ultimately that for Nvidia stock to really be a top performer, it needs to get investors comfortable that really calendar 27 is going to be a breakout, continue to be a breakout year. And so that's a really hard problem for the stock to solve, is that these results are undeniably phenomenal. It's hard to even put adjectives around how strong they are. But again, this is for an investor perspective. When you have a company that's approaching $5 trillion in market cap, it's just they need to see some confidence that this can continue down into calendar 27 and beyond.
Nvidia is still the center of the AI trade. The company is forecasting first quarter sales of about $78 billion compared with Wall Street's estimate of $72.8 billion. Does this guidance send a clear signal about where AI demand is headed?
I think that most investors should look at this as, number one, Nvidia's growth is going to be higher for much longer. To put into perspective on that calendar 27 number, the street's looking for 28% growth. I suspect that next year the growth will probably be closer to 50%. But there's a group that wants to focus on that. But more importantly, what's the takeaway about what's going on in AI? Is that based on my estimates, they said 50% of the hyperscalers are 50% of their revenues from hyperscalers. I think 70% comes from the top 8 companies. And essentially what these top 8 companies are doing is they are undeniably saying that this is going to be more transformative than what people expect. If you believe that these companies are competent, what they are telling us through their CapEx guidance a few weeks ago and now through the Nvidia guidance is that we are still very early in AI, and this will be more disruptive than what people think. And so I think that's the more important takeaway with these results, is just as both an investor and as just a person who's going to be, people who are going to be living through this. I think the message is very clear, is that this is going to be more disruptive in the 1 to 5 years down than we probably can understand today.
And Nvidia previously said that Q4 would include no data center revenue from China. The Trump administration already cleared sales of the H200 chips, but Nvidia hasn't sold any there yet. Did we get any meaningful update on overseas sales?
Didn't get a meaningful update, and this is one of those pieces of the business, if it does turn on again, it's unlikely that investors are going to give them much credit for it because it has been this very windy road. And again, investors are looking for types of revenue streams that they can sleep well at night knowing they're there. And the China revenue, I think, is the opposite to that. And so it's kind of boom or bust. So the answer, they did not give us much of an update, but even if they did give a favorable update, it probably wouldn't really change the narrative on Nvidia because it is a hit and miss type of opportunity in China.
And when you dig past the headlines, are there any details that investors might be missing that could turn into a negative as we continue to digest these numbers?
Well, there is a piece around the gaming side. You know, they that's about 8% of revenue, and they said that they are going to be supply constrained, and so it was unclear. Question came up, unclear on that front if that is something that can actually grow this year. So that added a little bit of pressure in the after hours to the stock. But as far as like the bigger question, really the substance of the call came down to the final question. And it came from Goldman's analyst, and he asked about just the sustainability of this. And I think people should really kind of focus in. And it was at the end of the call at the top of the hour, but Jensen, when he spoke for 7 minutes on essentially a manifesto that he went off on, and just in terms of how growth can continue to accelerate. And so, well, it's not necessarily a negative for those who are more optimistic about NVIDIA. I think it's important to understand the bottom line. His bottom line message is pretty simple, is that the world of computing is no longer recorded based like software. You design software. It is now real time based. That means that the need for tokens is going to be exponential, and they can continue to have revenue growth, what is higher than where expectations are for the next several years. And so I think that understanding his answer to that final question on the call is probably going to be most impactful in terms of how the stock's going to trade in the weeks ahead.
And there's been a software sell off tied to AI disruption fears. If NVIDIA's outlook is this strong, would that be good or bad for software?
Unfortunately, it's bad for software, and this is this crazy dynamic around AI. Of course, is that the more impactful it's going to be, the more benefit to some of these companies that are on the front lines on the infrastructure side, the more disruptive it's going to be just across the board. And from our perspective, software needs to have a moment. We haven't seen it where they need to really stand up and show that the narrative against them is not true. Google did this about a year ago when the narrative was that search was going to be taken away by generative AI. In fact, they found a way to corral that increased amount of questions that people were asking into faster search growth. So they really stood up. Google made a statement a year or so ago on that topic, but we haven't seen that from the software companies. So to answer your question is that these results are more negative than positive for overall software. And we're just going to have to wait for them to really show in terms of guidance that they're not at risk.
Thanks so much for taking the time.
Thank you.
NVIDIA once again proving it carries enormous weight in this market, and the company's Q4 earnings report may shape the next move not just for the stock, but for the entire AI trade. For Investors Business Daily, I'm Claire O'Connor.